You are watching Market Watch, the brief overview of the key events from the world of finance. In recent weeks, the US dollar has maintained its strength amid statements from the Federal Reserve that there is no urgent need to cut interest rates. The Fed appears determined to keep rates at their current levels despite a significant economic slowdown and other financial challenges. This decision supports the dollar's growth against other currencies, such as the euro and the Japanese yen, strengthening the US position in international markets. Investors are closely watching potential future Fed actions, particularly in the context of rising inflation and possible economic shocks in other regions. Currency markets have recently been under pressure from various political and economic factors. The resilience of the US dollar is supported by the Federal Reserve's decision not to rush with rate cuts, despite signs of economic slowdown. However, other currencies, such as the euro and yen, remain under threat due to economic instability in their respective regions. Political tensions, especially in countries like the UK and China, continue to impact exchange rates, creating additional risks for investors and potentially leading to further market volatility. Inflation in Japan continues to rise, adding pressure to the economy and financial markets. In February, the country's core inflation rate reached 3%, keeping the possibility of monetary policy changes by the Bank of Japan in focus. These figures fuel speculation about a potential interest rate hike, which could impact currency markets and financial flows in the region. As markets monitor the Bank of Japan's actions, they are also assessing the risks of further economic consequences and the possible responses of other central banks to developments in Japan. The oil market, in turn, is showing growth due to new U.S. sanctions against Iran and measures taken by OPEC+ to control overproduction. As a result, global oil prices have surged, factoring in the reduced export volumes from Iran and OPEC+ decisions to implement additional production cuts. These measures are expected to support oil prices in the coming months. However, risks remain, including potential policy changes by key players and fluctuations in global demand. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.